It was a bit of a red day on Wall Street yesterday, but you know what? We're kind of bouncing along the same place we've been for a while now, since before Christmas, from what I can recall. And the Dow settling in at 32.9, almost 33,000. The Nasdaq over 10,000. S&P 500, 3,800, just over. And it makes me wonder: should I do anything differently? Should I just hang on? As I said, Alan Greenspan says a recession is likely on the way. We see that Amazon is laying off 18,000 people. Should I be concerned about that? I don't know. That's why I bring in experts like Nick Hopwood, a certified financial planner, founder of Peak Wealth Management. Nick, good to have you back.
Thank you, Steve. Happy New Year to you.
Happy New Year to you. I hope it's a happy New Year. A lot of folks I talked to were quite happy to see 22 close up and leave. I don't know how you felt about that, but a lot of people are like, see you later. Let's try again. As far as Wall Street goes, as far as investing goes, how would you sum up 2022?
Well, we're certainly hoping for more glee in 23. 22 is the worst year since 2008 for the stock market, and in our lifetime for the fixed income market. And also, the driver of much of that was, extreme rate hikes by the Fed, the fastest rate hikes in history, driving all those negative returns. So we're glad to be into 23 for sure.
Absolutely. All right, so pull out your crystal ball, give it a good polish there, and tell me, what do you think for 23? I mean, I'm an optimist. You're an optimist because you're in financial planning. I'm a business owner. You have to be optimistic. Otherwise, you'd have a lousy day every day, because you could find 100 things every day. So, well, this is bad, this isn't good. But what are some of the bright spots you see out there, Nick?
Well, as you said, we definitely embrace that entrepreneurial spirit. But in 23, right, we look back at 22, the S&P down nearly 20%. Generally speaking, and this is not, a recommendation, but generally speaking, the next couple of years after a big down year like that, we would have outsized positive returns on the upside. So there are outliers where that has not happened, but generally speaking, after a big down year, the next couple of years are above average. And as I've been mentioning, in the fixed income market, that is very exciting from our point of view, since rates have increased so much. Now,
let's talk about that for a second. When you talk about the fixed income market, explain what you mean.
Sure. So it's everything from 4.25% in a money market, or 5 and 6% in longer term bonds, where many retirees have a large percentage of their portfolio. And so if you're running financial planning projections and using a 5% estimated return, and you can make 5% in fixed income, it makes the planning part a lot easier.
So, that's something that's going to sound awfully appealing to a lot of folks, because they're worried about inflation. I don't know what our final inflation number was for 2022, but it was the highest inflation we've had in a very long time, somewhat higher than it had been since the 1970s at different points. 9.1% it peaked out in June and July. So that was pretty disheartening. I mean, I was at the grocery store here the other day, and a dozen large eggs are $4.59. Talking about a jaw dropper. This is why I stay home, Nick. I don't want to see things like that. It upsets me. So you see problems like that out there. How do we get ahead of it? Do you trust the plan? I mean, I know that's what a lot of folks say. Just put it in a drawer, trust the plan, and ride it out. It's not the first time we've hit rough water, is it?
It's not. In my career since 99, we've had 3 or 4 bear markets, and we trust the plan, and it's worked every time. So I would continue to anchor those thoughts to, are we still on track? Let's look at the big picture, make sure we're still on track. And speaking of inflation, okay, the jobs number comes out this morning at 8:30. Then we have the inflation number next week, which should be hopefully with a 6 handle, right down from 9.1. Last month it was 7.1. I'm hoping for something in the 6% range. And then the Fed meets again in February. And if the data continues to come in as expected, we would expect the Fed to only increase by 0.25%. And the markets should really like that.
So you're still thinking 0.25% increase, though, in interest rates. Okay, so that's basically probably where it would end. At least somebody would hope so. Now, having said that, I'm looking at the price of gasoline here again. Up again. It's gone up 12 cents in just the last week. Gas prices on their way higher again. Diesel, strangely enough, is remaining lower than it has been. But energy prices as demand rises, and yes, we're in a bit of a mild period here in much of the country for winter, but winter will be back. Demand on heating oil and natural gas will increase. How important are energy prices as you look to the future?
Well, they're very important, but we are seeing like natural gas prices crater over the past month. But I got to say, last week we drove to Florida because the flights were $1,800. So I have a family of five. Yeah, I have a family of five. We decided to drive. It was like $400 in gasoline compared to $9,000 for airline prices. And when we were down in Florida speaking to a lot of retirees, it reminded me, and here we are in a new year, many folks might be thinking about retirement. And there's 4 questions that we want to ask ourselves if we're ready to retire. Number 1 is money. So call someone like us for a second opinion. You can reach out to us at peakwm.com. We'll take care of the money part, but there's more to it. The second question is, have you accomplished what you want in your career? Is there more work to be done? The third question is, what am I going to do with that 40 plus hours per week? You can't retire to the couch. It won't work. And finally,
we need to tell the kids that. And finally, go ahead.
Is my spouse on board? You know, you have to be aligned with what you want between you and your wife or your husband.
Yeah, it's important, no question. Nick Hopwood, happy New Year as we lean into it, and I'm glad we're in a new year. Looks like things could be looking up. We'll find out, like you said, later today. We'll find out some information. A little bit later, we'll find out more information, and hopefully it's looking better. Nick Hopwood, certified financial planner, founder of Peak Wealth Management. You can find out more at peakwm.com, peakwm.com. Nick, thank you.
Thank you, sir.
All right, I'll take a break and be back right here on the Steve Gruber Show.